Today, I want to explain how I organize my portfolio and how I think about the future economy. I divide everything into 4 buckets. One is the physical world, which is the raw materials and the future needs. I've already discussed the physical world in previous videos, which you can find in my channel. Today, I'm going to be talking about the power layer, the electricity and energy infrastructure that makes AI possible. My next video, we'll talk about the digital layer, so semiconductors, photonics, satellites, and AI infrastructure. And then I'll make a video about the new financial system, blockchain networks, and tokenized finance. But I believe the most important bucket right now may actually be the power layer. And that's because AI is no longer just a software story. It is becoming an energy story. All right, and so everyone is focused on NVIDIA chips, but the real bottleneck may become electricity. AI data centers require enormous amounts of power. I'm sure you've heard about this in the news. Cooling, backup systems, and infrastructure. The International Energy Agency projects that data center electricity demand could double by 2026. Goldman Sachs estimates the US grid may need roughly 40 gigawatts of new demand capacity just from AI by 2030, only a few years away. That changes the investment landscape completely. The winners may not just be software companies, or maybe they won't be software companies at all if the Anthropic story plays out. The winners could be companies controlling power, grid access, cooling, think Vertiv, battery storage, and energy infrastructure. And so my thesis on CIFR, which is one of these AI infrastructure stories, is not simply that it is a Bitcoin miner pivoting into AI. It's that the market may still be valuing it like a crypto company, while the real opportunity is AI infrastructure. I believe companies like Google and Amazon will ultimately be some of the largest winners of AI because they already control hyperscale cloud infrastructure, enterprise ecosystems, and massive compute demand. CIFR stands out to me because it already has direct relationships tied into this ecosystem, including AI infrastructure agreements connected to Google-backed FluidStack and a major long-term AI hosting agreement with Aon Web Services. Its advantage is access to cheap power and existing energy-intensive infrastructure that can potentially be converted into AI and HPC hosting much faster than hyperscalers can build new campuses from scratch. So in an AI arms race, speed and power access matter enormously. And so that is why I'm very bullish on CIFR. I'm also very bullish on TeraWulf. So WULF fits a similar thesis, but its nuclear adjacency makes it especially compelling because AI infrastructure requires stable, always-on electricity at massive scale. What separates WULF from many other miners is that it already has significant partnerships tied to Google-backed AI infrastructure expansion, including major FluidStack hosting agreements supported by Google, which also increased its ownership stake in the company. I believe Google and Amazon, as I said, are going to be the dominant long-term AI platforms because they control cloud ecosystems, enterprise distribution, and global compute infrastructure. As AI demand explodes, these hyperscalers may increasingly rely on external infrastructure providers like WULF to accelerate capacity growth. The bull case is that WULF evolves from a Bitcoin miner into part of the energy backbone supporting the AI economy, with the market eventually valuing it based on power access, AI hosting capacity, and strategic nuclear connected infrastructure rather than Bitcoin alone. And so just 2 things to think about. Just remember a few months ago when Amazon Web Services went out and how that affected so many businesses. And think about every time you search something on Google, and AI is used. And that's why I have the thesis that I do about these 2 companies. I also have some more speculative versions of the same theme. And that thesis is that former crypto infrastructure companies may become AI compute infrastructure providers. The market may still be valuing them like miners, even though they could evolve into AI hosting companies. One reason bulls are excited is because power and grid access are becoming the future. And so KEEL and DGXX, so KEEL was formerly Bitfarms, are 2 of my favorites that I have been trading and investing in for the past year or 2. But there are also other companies to look at like Hive, APLD. I do have a long-term position in Applied Digital as well. And I do swing trade it from time to time. Okay, so this is my next bucket. So my favorite dividend stock is Brookfield Renewable. It's one of the most important long-term infrastructure plays in this presentation. They own a massive global portfolio of hydro, wind, solar, storage, and energy assets. But what really matters is their connection to nuclear through Westinghouse, which I don't think very many people know about. Westinghouse powers a huge percentage of the global nuclear industry. Why is that important? Because AI data centers need massive, stable, always-on electricity, and nuclear may become one of the only reliable ways to support long-term AI energy demand at scale. The AI boom could eventually create a nuclear renaissance. And so this is something I hold in my IRA, and I add about $1,000 every year when it's on a dip, because I really like it and I like the dividend. I'm also really bullish on QuantumScape. It's probably the most misunderstood company in this presentation. I have talked to some other traders who think that it is a quantum computing company. And I've talked to other traders that think it's just an EV battery company. But if you had tuned in to the most recent earnings report, you will see the real bull case is much bigger. It's developing solid-state batteries with higher energy density, faster charging, improved safety, lower cooling requirements, which is huge, and potentially better durability than traditional lithium-ion batteries. That matters not just for electric vehicles. It could matter enormously for AI infrastructure, which is something they pointed out in their recent earnings call. Future hyperscale AI campuses may operate like giant industrial energy systems using battery buffering, microgrids, high voltage architectures, and large-scale energy storage. If QuantumScape batteries become, if is a key word, part of next generation AI power systems for companies like Microsoft, Amazon, or Google, the addressable market becomes far larger than just automobiles. The hidden thesis is that AI is forcing the world to redesign energy infrastructure itself, or at least I think so. QS also has a space and defense angle, aerospace and space infrastructure. In space, every kilogram matters. Higher energy density and improved safety are critical. Solid-state batteries could potentially power satellites, military drones, autonomous defense systems, lunar infrastructure, and future spacecraft. As AI becomes integrated into satellites, robotics, and autonomous systems, advanced energy storage becomes even more important. If QuantumScape succeeds commercially, it may evolve from a speculative battery startup into a strategic energy infrastructure company tied to AI, defense, autonomy, and space. So, I do want to talk about position sizing. So remember, this is not financial advice, right? I'm just giving some strategies that work for you. But there's always risk when you invest. So if you decide to make your own decisions, do your own DD, and invest in some of these companies or other companies, I try to keep my swing trades to 2% of my swing trade account. And so I have been trading DGXX, Redwire, KEEL, which was Bitfarms, some of those more speculative plays at 2%. And then I also have a core that I hold medium term to long term, and this is 2 to 4%. And this is where I'll hold CIFR and WULF that I mentioned today. And then my Brookfield Renewable Energy Partners BEP is sized for years. I've also been trading QuantumScape, swing trading it. And I've been doing 2 to 4% for QuantumScape. And eventually I do plan to take a long position. Again, this is not financial advice. It's just sharing some strategies and investment research that I have done. Always size your position to match your conviction, not your excitement. I would rather make less than risk more. I size up when I have more confidence, but when I size up, I usually take profits along the way. I usually trim. So for today's ending, I just want to end with the core idea behind this presentation. I think it's pretty simple. Most investors are still thinking about AI primarily as software or semiconductors, But AI is increasingly becoming a physical infrastructure revolution. That means electricity matters, nuclear matters, batteries matter, cooling matters. Cooling is very important. Semiconductors matter, and energy storage matters. The companies controlling those bottlenecks may become some of the biggest winners over the next decade. And just as a reminder, this is not investment advice.